First quarter profits for Bank of America down 13% compared to a year ago, but that was still slightly better than expected. You looked at the quarter, JP. What stood out to you for Bank of America?
The first thing that stood out to me is, so if you go on a Bloomberg terminal, you can look at a chart of where they basically chart analyst estimates. And what you'll see is analyst estimates for this quarter over the past 12 months basically went from top left to bottom right. So they're down like 45% over the past.
For Bank of America.
For this quarter, yep. Their earnings estimates for over the past 12 months fell by 45%. So yeah, they beat, but like you need to use some quotation marks there. Yeah. So basically what you had here was kind of like a tale of two cities, right? So the consumer banking side, they did pretty good. What was it? Earnings for this part of the business up 22% to $1.8 billion. They saw an increase in spending, an increase in deposits. But then you look at kind of the other part of their business. So, investment banking fees fell 22%, trading revenue down 16%. And interestingly, they had to, and perhaps not really all that surprisingly, they had to increase their provisions for credit losses for exposure to the energy markets by like around $500 million. So there really is kind of a tale of two tapes there. One side of the business doing pretty decent, other side not nearly as much.
Is that a refrain we're going to be hearing from all the big banks about energy? Because it certainly was the last time around we did earnings.
I would say big and small banks, if they have exposure to it. I think there probably are some smaller banks that are probably a lot more heavily concentrated. During the boom, they saw like all of this money. They kind of got a lot of exposure, worked out great for a couple of years, and now I think you're going to see some smaller banks be in a world of hurt.
Yeah, I think the bigger banks, the one thing that they are doing right, whether it's Bank of America or JP Morgan or Wells Fargo, is getting more customers in the door, and that's really what their focus is right now, because they do have, as Bank of America pointed out, you have strong job gains in this country, you have increasing home prices, you have higher stocks, they mentioned, and you have the beginning of rising wages. So you do have a strong consumer, as JP just talked about, but you have low interest rates, and so you're not going to make much money there, and low commodity prices, of course. So what they're focused on is building customer relationships, getting the number of clients up, and then when interest rates do go up, they'll earn even higher profits as a result. But right now, you can make pretty decent money on a giant client customer base. And if you keep growing it, that's one way to slowly grow.
Yeah, that spread, the net interest margin spread, the difference between what they get when they lend out money and what they have to pay out when people give them money. I mean, that's kind of not in their control, right? So it's good to see them focusing on what they can control, which is trying to gain additional clients. So if we ever do see rates move up again, then they'll be poised to kind of really benefit from that in a meaningful way.